Okay, now we move to the next concept, part 3 of the chapter, which is treatment of under or over absorption of overheads. Treatment of under or over absorption of overheads. As I've been telling in this subject, that any cost incurred by a company will be recovered from the end customer. Objective is very clear. I want to recover the money from the end customer. So Bharadwaj Institute decided that we are going to recover overheads as OAR 5,000 per student. This was the recovery rate we decided. We decided the recovery rate at the beginning of the year, 5,000 per student, be it CA, Inter, CA, Final, CA, everywhere we thought 5,000 per student should be the recovery rate. So when we decided your fees, we calculated the direct material cost, we calculated the direct labor cost, added the overhead figure as 5,000 rupees, got the total cost, added some profit margin, got the selling price or the course fees, and then also in a practical world, I compare whether the fees is reasonable looking at others in the industry. I cannot, just because my cost is high, I cannot charge a very high fees, but somewhere cost is taken into picture. So every student who pays Bharadwaj Institute fees, he pays 3,000 rupees for the material cost we incur, 10,000 rupees for the labor cost we incur, 5,000 rupees for the overhead cost we incur, and 2,000 or 3,000 is the end profit we make. This is the calculation we had in our mind, and we were recovering 5,000 per student. This 5,000 came because of a calculation we did at the beginning of the year. The beginning of the year we did budgeted overhead by budgeted suitable base. We did a calculation called budgeted overhead by budgeted suitable base. So our planning was 10 lakh will be the budgeted overhead, and number of students, we were thinking number of students is the basis, and we thought we will have 200 students. We are going to have 200 students. So 10 lakh divided by 200, you get 5,000 rupees is the recovery rate. This is decided at the beginning of the year. Problem is, this is also not certain. 10 lakh can become 11 also, it can become 9 also, it can become 8 also, it can go up to 12 also. Uncertain. Denominator is also uncertain. Both the numerator and denominator is uncertain. But at the beginning of the year, I still had to do a calculation. I went ahead and did the calculation and said 5,000 per student to my costing department told, and based on that we decided the fees, everything is fine. Then came this 10 lakh. As the year went by, this became 12 lakh. 10 lakh became 12 lakh. Unfortunately, we incurred more expenses and all, some rent expenses increase, some salaries increase, some maintenance increase, all that put together, our 10 lakh became 12 lakh. 200 students which we were planning, our planning said we will get 200 students. We got 160 students. This is the reality. We got only 160 students. Our plan said 10 lakh, 200 students, 5,000 per student. In reality, it is 12 lakh and 160 students. So I incur 7,500. I incur 7,500. The plan was to incur 5,000 per student. Reality is 7,500 per student. Plan is 5,000 per student. Numerator 10 became 12. Not in my hand, can change. Ideally should not change a lot, but still it can change. Denominator, number of students, also not in my hand, it can also change. Both went a change and 5,000 became 7,500. My costing department then told me we recovered from students 160 into 5,000 rupees. This is what I recovered from the student. I recovered from students 160 students. Every student paid 5,000 for overheads. Others were there. That is okay. So you paid me 8 lakh rupee, whereas I incurred 12 lakh rupees. I incurred 12 lakh rupees. You paid me only 8 lakh rupee. This is an exercise every organization does, including Bharadwaj Institute. Every organization tries to recover overheads. The recovery rate could be wrong to little extent, could be wrong to a huge extent, but anything can happen. So I did all this calculation. 10 became 12 and 200 became 160. It can be other way around also. 10 became 12, 200 students became 300 students. 200 students became 300. If I do the calculation, it will be 4,000 per student now. It will be 4,000 per student. So one point is very clear. Every organization recovers money from the end customer. Let's be very, very clear. Recovers money from the end customer. Every organization recovers money from the end customer. Where, for what do I recover? I recover it for all expenses incurred by me. I recover it for all expenses incurred by me. I recover it for all expenses incurred by the organization. All expenses incurred by the organization. So I went ahead and recovered 8 lakh rupees. I have incurred 12 lakh rupees. 4 lakh rupees, there is a shortfall. So what I do, I call all of you and tell, please pay us extra. You said nothing doing, we will not pay you extra and all. You told us fees, we have paid the fees and all. Now you suddenly tell that your expenses gone up, you pay us more, not possible. But I have incurred 4 lakh extra. I have incurred 4 lakh extra. Ideally, if I had done the correct pricing, every student would have paid me 2,500 extra. Every student would have paid me 2,500 extra because I did a wrong estimation or something happened wrong in the actual whatever. In the end, my 5,000 became 7,500. I am calling you, telling you to pay extra 2,500. You are saying no, not possible at all. You never told us that it has to be paid extra and all. So no customer is going to pay for this. No customer is going to pay for this. This is the situation. First thing, under absorption means overhead incurred minus overhead absorbed, can be positive under absorption, negative over absorption. Over absorption means you have recovered more than what is absorbed. So over absorption formula is absorbed minus incurred, or technically we have only single formula, but there can be an under recovery, there can also be a over recovery. There can be an under recovery or there can be a over recovery. So I did some recovery extra or I did some recovery less. I get to know that 4 lakh is the loss I have, or 4 lakh is the under recovery. If you say this is a small amount, if you say this is a small amount for the company, please take it to costing P&L. Don't disturb the students now. Don't disturb the customers now. Take it to costing P&L account. Take it to costing P&L account and don't disturb the people now. Don't disturb the people. So we pass a journal entry called costing P&L account debit. Why debit? Because it's a loss. It is a loss to overhead control account. Why this overhead control account? You will learn when we go to next chapter. Next chapter, cost accounting system, journal entry is passing. But basic thing is it will go to costing P&L. It will go to costing P&L account and it is a loss for me. It is a loss for me. Second is abnormal reason. What is abnormal reason? 10 lakh became 12 lakh. Why did it become 12 lakh? You incurred some extra rent cost which is abnormal in nature, or you did some huge maintenance which was unplanned for, or it is an abnormal activity which has been done by an organization, some planning level issue. Students should have been 200, but somewhere one batch you did not do it properly, so you lost 40 students. Lot of issues happen. So if the under recovery is due to abnormal reason, abnormal reasons are those which are problems for the company. What are normal reason? In the industry, inflation went up, because of which rent went up for everyone. In the industry, there was shortage of manpower, so we were not getting proper admin people in the industry, so everybody started paying more. Everybody started paying more. If everybody is having an increase in cost, it is normal reason. If I alone have an increase in cost, it is abnormal reason. Can be decrease also, can be decrease also, can be increase also. So abnormal reason, transfer to costing P&L. Abnormal reason, transfer to costing P&L account. Transfer to costing P&L account. So abnormal reason also customer will not pay. Then comes normal reason. Comes normal reason. What does normal reason say? use supplementary recovery rate. Use SRR means supplementary recovery rate. Use supplementary recovery rate. So SRR normal reason means supplementary recovery means I call the customer and tell them to pay more. Tell them to pay more. But still there is an issue there. Use supplementary recovery rate. What is supplementary recovery rate is? Whatever is the amount of normal under absorption, normal, not the abnormal one, not the small under absorption. Okay, normal under absorption, whatever happened, you first calculate, which is 4 lakh. Divide this by units produced including work in progress. How including work in progress happens is, let's understand this. Now I'll remove the Bharadwaj Institute example. An organization produced 10,000 FG. In this 10,000 FG, 8,000 sold, 2,000 unsold. Unsold will be finished goods. I produced 10,000 units, 8,000 sold, 2,000 unsold. On top of it, 6,000 units work in progress. 6,000 units are work in progress. What is work in progress is those units which are not fully complete. Those units which are not fully complete. In the denominator, I have to take units produced including work in progress. But the problem is this is fully complete. This is partially complete. This is fully complete and this is partially complete. Adding them together is wrong. Units produced including work in progress. Including work in progress. So for the work in progress, they will give something called as degree of completion. Degree of completion. They will say these 6,000 units are 40% complete. Are 40% complete. Are 40% complete. If they say this is equivalent to 2,400 completed units. Equivalent of what is 2,400? 6,000 into 40% complete. 6,000 into 40% complete is equivalent of 2,400 completed units. Is equivalent of 2,400 completed units. Equivalent of 2,400 completed units. So I have under recovery some 4 lakh rupees. 10,000 units produced, 8,000 sold, 2,000 unsold, and 2,400 equivalent completed work in progress. 2,400 equivalent completed work in progress. Equivalent completed work in progress. Clear? Any doubts on this? So what question the concept says is, in the denominator do 10,000 which is produced and 2,400 which is equivalent produced. Can you divide and tell me the number? Give me a 2 decimal answer. How much? 32.26. 32.26. 10,000 fully completed. 10,000 fully completed and 4,000 partially completed units. 6,000 partially completed units with a degree of completion of 40%. With a degree of completion of 40%. So 2,400. Now what concept says is already sold. So if you have already sold, cost of sales account debit 8,000 into 32 rupees. This is your loss. You are debiting the cost. When you debit the cost goes up. When you debit the cost, expenses go up. When you debit the cost, expenses go up. If you have already sold, ignore it. That's all. Forget it. If you have already sold it, ignore it, forget it. Ignore it and forget it. You have already sold the units. Increase your cost of sales. Increase your cost of sales. Cost sheet says any abnormal expense will not come in the cost sheet. Any normal expense will come in the cost sheet. So this 8,000 into 32.26 will form part of cost sheet. 8,000 into what? 32.26. FG, control account debit. What is FG? 2,000 units unsold. 2,000 units unsold. into 32.26. This will be debited to FG. This will become opening stock in the next year, and next year customer has to pay more. Next year customer has to pay more. This year is gone. Gone is gone. I can't worry about it. I can't do anything about it. So in Bharadwaj Institute example, this will not work because we do not have any stock and all. So whatever normal under recovery happened, that's okay. You under recovered 32 rupees per unit. Unit sold. I call the customer. He says nothing doing. But at least in the next year, when I sell the product, I will increase 32 rupees to the overhead cost. Total cost will go up. Selling price will go up. Selling price will go up. So this will be recovered from the next. This will increase my stock value. This will increase my stock value. This will increase my stock value. So what will happen is on the debit side, I incur the expense. In the credit side, I'll increase the stock value. This is neither my profit nor my loss. This is neither my profit nor I had 4 lakh under recovery. I had 4 lakh under recovery. What is that 4 lakh? In the debit side, more expenses are there. In that 4 lakh, you are saying 8,000 into 32.26 is gone. Ignore it. Is gone. Ignore it. No customer will pay for this. No customer will pay for this. Forget it. That's all. It is gone. Gone is gone. This increase your closing FG. Increase your closing FG. Then WIP control account debit 2,400 into 32.26. Ignoring the rounding of difference, this will add up to 4 lakh rupees. Ignoring the rounding of difference, this will add up to 4 lakh rupees. 2 overhead control account 4 lakh. 2. Why 2 overhead control? You'll learn later. Okay. So I am going to debit cost of sales, increase in cost, reduction in profit. I am going to debit FG control. FG control increase in closing stock. In the debit side, expense is already there. Expense went up, closing stock went up. No increase, no profit, no loss. No profit, no loss. So whatever you debit to these two places, whatever you debit to these two places, no profit, no loss. Whatever you debit to these two places, no profit, no loss. I'll repeat again. I had an under recovery. I ignore the Bharadwaj Institute example. Take a manufacturing company. 4 lakh under recovered. 4 lakh under recovered. I'm very upset with that. 4 lakh under recovery. The purchase manager or the costing manager asks the MD, is it a small amount? He says, yes, it is a small amount. Then we say, let's transfer to costing P&L. Let's transfer to costing P&L. If it's a small amount, let's transfer to costing P&L. Let's not worry about it. Let's not disturb the current customer. Let's not disturb the next year customer also. Insignificant amount. Ignore it. Proceed ahead to the next year. Then I understood that no, it's not a small amount. Then he said it's a big amount. Okay, let's a big amount. Then I asked, why did it happen? He's saying it happened because of certain abnormal things. The costing guy did not do it properly. Estimation went wrong. The finance guy spent more. The purchase guy spent more. Everything went wrong in the company. When I say everything went wrong, please ignore it. Transfer to costing P&L. Transfer to costing P&L. You cannot tell your customer to pay. Not the current year customer, not the next year customer. Both are not going to pay. Not the current year, not the next year. Ignore and proceed ahead. Ignore and proceed ahead. Then came the third one. Normal reason. Normal reason. Once I found out normal reason, then I said, let's do supplementary recovery. I became very happy. Then I said, supplementary recovery is okay. But if I've already sold the units, again forget it. If you've already sold the units, again forget it. That is going to be a loss only. That is going to be a loss only because you have already sold. If you have already paid the fees, if Bharadwaj Institute tells you pay fees and you have already paid, I cannot recover more. If I had told you that at the end of the year, I'll tell you the fees and you have to pay, then I can recover more. Then I can recover more, which is like closing stock. I can sell it in the next year and recover more. I can sell it in the next year and recover more. So supplementary recovery rate is amount of normal under recovery. Amount of normal under recovery, which can be 4 lakh, 3 lakh, 2 lakh, 5 lakh, 6 lakh, whatever amount, divided by units produced as FG plus equivalent units of work in progress plus equivalent units of work in progress. What is equivalent units of work in progress? Work in progress units into degree of completion. Work in progress units into degree of completion. I got that number. Very happy with all this calculation done. Then now I say I want to recover extra 32 rupees from the customer. Units sold, I spoke to the customer. He got irritated and said, don't call me because no customer is going to pay extra now. No customer is going to pay extra now. So 8,000 into 32 is gone. 8,000 into 32 is gone. Then unsold I had, which I'm going to sell it in the next year. Next year I increase the closing stock value. It becomes part of opening stock and I recover from the customer. I recover it from the customer. When I recover this from the customer, it's neither my profit nor my loss. It's neither my profit nor my loss. And work in progress, I will complete it and recover it from the customer. I'll complete it and recover it from the customer. So whatever unsold FG is there, do into the recovery rate, and equal units of work in progress do the into recovery rate. Any doubts on this? Clear? Can we proceed? Let's take certain exam. If you have over absorption, it will mean higher absorption. Opposite journal entry. Opposite journal entry. What is opposite journal entry? Is costing P&L will be credited. Costing P&L will be credited. In the second entry, cost of sales will be credited. Why we are crediting? Cost of sales will go down because you have recovered more from the customer. You should not have recovered more. You should have recovered less. So reduce cost of sales. That's your permanent profit. You are not going to go back to the customer and pay him. FG value will go down. Next year, please recover less. Next year, please recover less, and WIP control will also go down. Any doubts on this? Opposite entry. Let's take certain example. Actual overhead is 25% more than budgeted overhead. Actual overhead is 25% more than budgeted overhead. Actual units are 40% more than budgeted output. I don't know any of the numbers, so I'm going to take some random number and then do this example. Actual overhead is 25% more. Actual units is 40% more. This scenario will lead to under absorption, over absorption, neither under absorption nor over absorption. Let's take some example. Budgeted overhead 10 lakh. Budgeted units 1000. Budgeted overhead 10 lakh and budgeted units is 1000. My OAR, if you divide 1000 per unit, if you divide it is 1000 per unit, 10 lakh divided by 1000, 1000 per unit. Every customer I am recovering 1000 rupees at the end of the year. At the end of the year, the actual overhead is 25% more. Actual overhead is 25% more. So I ended up incurring 12 lakh 50. I ended up incurring 12 lakh 50. The actual overhead is 25% more. Actual units is 40% more. Actual units is 40% more than the budgeted output. So units went up to 1400. Units went up to 1400. Every unit I recovered 1400 into 1000 rupees. Every unit I recovered 1400 into 1000 rupees. Every unit I recovered what? 1400 into 1000 rupees into 1000 rupees. I'm again repeating, budgeted was 10 lakh. Any number, any random number you take, okay? 10 lakh, 1000, 1000 per unit. 10 lakh went up to 1250, 1000 went up to 1400. My recovered amount is 1400 into 1000, 14 lakh. 14 lakh. Under recovery, over recovery. What has happened here? We have recovered more. We have recovered more. I have recovered 14 lakh rupees. I have recovered 14 lakh rupees. Any example you can take. I've taken an example and then done it. Let's look at this. Live online guys, any doubt? Somebody has unmuted. Okay. Accountant for Brilliant Tools Limited applies overhead based on machine hours. Overhead based on machine hours. That is OAR is based on machine hours. Budgeted overhead and machine hours for the year. Budgeted overhead and machine hours for the year is 1,30,000 and 8,000. 1,30,000 and 8,000. Tell me the OAR. Tell me the OAR number. Participate guys. I want it to be louder. 1,30,000 by 8,000. How much? 16.25. 16.25. 16.25 per machine hour, not per unit, it is per machine hour. So I was recovering the 6.25 per machine hour. Then they are saying actual overhead and machine hours incurred were 137,500 and 10,000. 137,500 and 10,000. So my recovery is into 10,000. Into 10,000. Every machine hour I have recovered 16.25. Every machine hour I have recovered in 16.25. So I have recovered 162 and I have incurred 137,500. I have recovered 162 500, incurred 137 500. After that they have not asked for it. It can become a proper question where I have to do under recovery over recovery analysis, which is not there in the MCQ. Tell me, under applied or over applied here? Under recovery, over recovery. Over recovery by how much? Over applied by 25,000. Over applied by 25,000. Amount of under absorption 1 lakh 50. Amount of under absorption 1 lakh 50. I have given the under absorption. 60% is due to factory inefficiency. 60% is due to factory inefficiency. Factory inefficiency, normal, abnormal? What is the reason? Is it a normal or abnormal according to inefficiency? I want participation, guys, please. Abnormal. Factory inefficiency is the problem of the company. 40% is due to cost of indirect material and indirect labor. Cost of indirect material means it would have gone up in the industry. 40% normal and 60% abnormal. 40% normal and 60% abnormal. Company has produced 9,000 fully complete units. 9,000 fully complete units and 2,000 partially complete units. 2,000 partially complete units which have 50% degree of completion. Company has sold 8,000 units. How much is the impact on profit due to under absorption? We are going to do it together. I'm going to do this journal entry and other things and finally tell what is the impact on profit due to under absorption, and then we'll do proper descriptive question. This MCQ, let's do it together. This is page, you can write in your notebook, page 41 MCQ. Page 41 MCQ. Page 41 MCQ. MCQ. Right. Normal under absorption equal to 1 lakh 50. Under absorption 1 lakh 50, not normal. Under absorption 1 lakh 50. Under absorption 1 lakh 50. Factory inefficiency. Factory inefficiency abnormal. Factory inefficiency abnormal. Inefficiency abnormal. 60% of 1 lakh 50. 90,000. 60% of 1 lakh 50, 90,000. Take to costing P&L. 60% of 1 lakh 50 take to costing P&L. This will go to costing P&L account. This will go to costing P&L account. 60% of 1 lakh 50 take to costing P&L account. What journal entry I'll write in some time. Take it to costing P&L. Cost of indirect material and labor normal. Increase in cost would have happened. This is normal. Why normal? Because everyone would have had this. 40% of 1 lakh 50, 60,000. Use supplementary recovery rate. Use supplementary recovery rate. Supplementary recovery rate. Come down. SRR equal to amount of normal under absorption. Normal under absorption. Units produced plus equivalent work in progress. Units produced plus equivalent work in progress. Units produced plus equivalent work in progress. Equivalent work in progress. equivalent work in progress 60,000 divided by, in the example we have produced 9,000 units, in that some are sold, some are unsold, that's okay, and 2,000 partially complete, which is 50% degree of completion. 9,000 plus 2,000 into 50%, 2,000 into 50%, 2,000 into 50%. How much is SRR? Every unit I want to recover 6 rupees. Every unit I want to recover 6 rupees. That's the recovery I'm going to have. 6 rupees per unit. 6 rupees per unit. Journal entries. Journal entries. 6 rupees per unit. This MCQ itself is sufficient to understand the core concept. Then we'll do some proper descriptive question. 6 per unit. Any doubts on this? Abnormal reason. Abnormal reasons. Abnormal reasons. Abnormal reason. Costing P&L account debit. You can also call it as normal P&L also. Costing P&L account debit to overhead control account. This is a loss for the company. 90,000 gone. This will reduce my profit. Costing P&L account debit to overhead control account. 90,000 is a loss. 90,000 is a loss. Costing P&L account debit to overhead control account. 90,000 gone. What is this 90,000? Factory inefficiency. Factory inefficiency. Normal reasons. Normal reasons. Normal reasons. If it's normal reason, then I will tell people to pay. Problem is, I've already sold some units. I cannot go back to them and all to pay. Cost of sales account debit. Cost of sales account debit. Cost of sales account debit. This is basically of the 9,000 completed units. I wanted everybody to pay me extra 6 rupees. I get to know 8,000 is already sold. 8,000 is already sold. So 8,000 into 6. 8,000 into 6. Again, this is a loss for me. 8,000 into 6. This is a loss for me. FG control account debit. Why this word control comes and all, you will understand when I go to the cost accounting system chapter. FG control account debit. Of the 9,000, 1,000 is in stock. Next month, whoever is buying it, he has to pay 1,000 into 6 extra. Apart from the normal fees, he has to pay 1,000 into 6 extra. 1,000 into 6 extra. 1,000 into 6 extra. FG control account debit. 1,000 into 6 extra. WIP control account debit. WIP control account debit. Equivalent WIP is 1,000 units. Equivalent WIP is 1,000. Next year, you have to pay the 6,000 again to overhead control account. 60,000 which I could not recover. I wanted existing customers to pay 48,000, which is not going to come. 6,000 for the next year customer and 6,000 by the next year customer, that will come. So my loss is 90,000, another 48. My loss is 90,000, another 48. Both are my loss. 90,000 is my loss and 48,000 because it's already sold. It's already sold. I cannot go back to you and tell you to pay a higher fee. So it's not possible. Any doubts in this? Any doubts in this? Impact on profit. Impact on profit. 90,000 gone. Another 48,000 gone. 90 and 48 gone. Impact on profit 138. Impact on profit 1,38,000. 1,38,000. Any doubts on this? In the MCQ, we wanted profit. Profit will decrease by 138. Profit will decrease by 138. There are some more examples which I'm not doing now. I just wanted to do one example and then we'll get into descriptive question. Any doubts on this? Any doubts?